felt it would give us the best access to the strongest possible group of senior insurance decision makers.
Insurtech Insights is a must-do conference, I think, for the network that is built here.
Welcome to this year's Insurtech Insights and the first panel here at the Red Stage. I'm Roberto Commonstead, and I'm really excited to introduce this really fascinating conversation, which will be on the importance of leveraging partnerships and distribution. I now welcome the panel to come to the stage and take their seats. Thank you.
Everybody's tired.
And I'd like to welcome your wonderful moderator, Lisa.
Thank you so much. Okay, are we on? Testing, 1, 2. Oh, we're good. Well, first of all, give it a big round of applause. You are day 1, panel 1 on the Red Stage. Yes, we are so excited. We got to have a high energy level, right? And if you don't have a high energy level, I have it on the download that this stage and these panelists are willing to do distribution karaoke for you all. Right, gentlemen? Okay, so first of all, on a serious note, Lisa Wardlaw, very excited to be here today. We have an amazing set of panelists. Joining us, Domingos, Quentin, Dan, and Masashi. I'll let them all introduce themselves and their role. But first of all, I just want to introduce you all to the topic. So a lot of times in insurance, we focus on what I'll call as the middle and the back end of the value chain, which is critical. I come from that part of the middle and the back end of that value chain. And often we overlook the front end and the core, the cerebral core of the value chain, which is distribution. So today we're going to be all focused on distribution, the evolution in distribution, the partnerships in distribution, and how these panelists have tapped into that cerebral core to actually fuel and funnel their business models. So over to you. I'd love it if you would start us off with a brief intro. Yeah, to everyone. I mean, I could introduce you, but they don't know your karaoke skills.
Oh, thank you. Hi. Good morning, everyone. My name is Namatame. I'm a Group Chief Digital Officer for Tokio Marine. For today, I'm a little bit humble because together with me, there are 3 CEOs. I'm the only CDO, which is one character differences. So I have to be a little bit humble by joining this wonderful panel occasions. The other thing I'd like to introduce myself is that I work for Tokio Marine. Seems like I'm the only representative from the legacy existing old-fashioned insurance companies, whereas we have lots of Insurtech leading-edge companies from all over the world. So I'm, in that sense too, I'm a little bit humble as well. But just quickly, Tokio Marine is a 140 years old company, but running business across 46 countries in the world, and we are growing our proportion of non-Japan related businesses from only as little as 2.5% like 20 years ago, but nowadays we have more than 60% of the GWP profit contribution proportion out of Japan and overseas. So going forward, we continue to be aspired to the global insurance companies and expanding our product lineup, expanding our distribution capabilities, expanding the ideation, and expanding this, further diversification of the businesses. Those continues to be our strategic focus, and I would like to work in partner with our Insurtech companies. So being a Chief Digital Officer, I'm pretty much honored and excited to be a part of this journey, and I would like to create kind of unprecedented kind of evolutions for the Insurtech related areas, working together with three these gentlemen too.
Well, welcome.
Thank you.
We're very excited to have you here. Domingos?
Hi everyone, my name is Domingos. I'm one of the founders of Habit. At Habit, we are a sort of an umbrella on top of everything that composes an insurance product, from quoting to servicing, and which means that on top of that connectivity with all those components, we are able to create like a true single API for everything that is related with either distribution or either the management of the policy's life cycle. And this also, of course, translates into a unified customer experience, not just the digital experience, but also everything that is after sales, everything that is related with handling the insurance product and managing it. Habit is also very focused on collecting everything that is about contextuality, meaning that we are designed to collect data from our partners, the ones that interface the end customer, which means that with this data we are finding the right moments, not only for sales, but to find the right moment to introduce an insurance product to end customer, but also then to, again, manage the properly manage the policy life cycle. At the end, just to conclude, we are very focused on telcos for this reason, large customer base, high amounts of data, but also financial institutions, specialized retail, everything that gives us the contextual data to operate the insurance product.
Awesome. We're so glad you're here. I really want to talk to you about what happened when AT&T went down and I couldn't use my phone for 48. Well, we'll have that discussion later. All right, over to you.
Morning, everyone.
I think you're on now.
I'm on.
Yeah.
Okay. My name is Dan Bratships. I'm the CEO and co-founder of Inshur. Vision behind the company is we think the world is becoming on demand. So we get our food on demand, we get rides on demand, we get packages on demand. And I think what most people don't realize is insurance is a really important part of the on-demand economy. And so we are an embedded MGA and TPA. We build embedded solutions to platforms such as Uber, Amazon, and Turo. And we work with those platforms to create innovative embedded products that help their workforce. We get a lot of alternative data that we then use to price and underwrite in new ways. We operate most of the US, the UK, and small parts of mainland Europe as well. And we think embedded is like a super innovative way to distribute insurance, and it's one that we're very excited about. So super thrilled to be part of this panel.
Very excited, very excited. And I love that we're getting beyond Embedded 1.0. So very excited to see. Yeah, Quentin, would love for you to introduce yourself, and then we're going to get into the details.
Yes, so hi everyone, I'm Quentin, CEO and co-founder of Qover. The vision is to kind of build a global safety net thanks to embedded insurance, where the final purpose is that people don't buy insurance anymore, but it's included everywhere for whatever you do and what happened to you. Long story short, we are a leading European and in the UK embedded insurance orchestrator, meaning that we can orchestrate any type of insurance solution for a lot of distributing partners that want to add insurance into their value proposition. So it's really, enabling other partners to include insurance into their value proposition. And to do that, we have a three-part. Part number one is a managed platform that enables us to configure any insurance product in Europe in any languages, any line of business from motor to travel to banking and so on and so on. We have a tech-driven TPA where we do customer care and claim management in all languages. And finally, we have a legal and insurance team because we have the chance to have a very highly regulated continent, but where the regulation is very local. And so we need to cope and deal with that. And the combination of the three enable to orchestrate any type of insurance program. For example, we do Insure My Tesla in Europe. We do the full insurance or most of the insurance of Revolut across Europe. We're active with delivery riders. That's very similar somehow to my friend Dan, but in a different perspective.
Love it. So as you can all see, we've got an amazing diverse perspective up here. Audience, I want to let you know quickly on the format. I'm sure you all have your phones in your pocket or out. Go to slido.com and you can use the hashtag ITIEU 2024 to log in. Choose Red Stage, and as you hear the panelists address the questions for the next 20, 25 minutes, you can go ahead and ask them your questions, and we will be taking your questions towards the end of the Q&A session. So make sure you have that out. Make sure you're logged in. You should also be connected to the Wi-Fi, and go ahead and start serving your questions up. Okay, let's get it going. 20 minutes, we're going to do a quick deep dive into the how important is distribution, and what do we mean by that, and how do we prioritize partnerships? So Quentin, first question I want to tee up to you. There's always this Insurtech partnerships, partnership, like I call it like the land of the abyss, right? There's so many partnerships. How do you really effectively identify these partnerships? And then how do you focus that within the distribution channel? And then, of course, how important is that for your business model? So we'll take it over to you, and then I also want to hear if what the three of you have to think about that as well.
So it's a good question. The question how to identify the right distribution channel. And let's be clear, it's nothing new. There are a lot of distribution channels that already have embedded insurance. It's called affinity somehow. And so the question is to see, okay, are there like new emerging distribution channels that could represent a new opportunity for Insurtech? Or are there existing distribution channels that are already having an insurance program, but they are prone for disruption because something is changing, and so there is an opportunity for Insurtech. And when we think about that at Qover, we realize that there are 3 key parameters that are the same, whether to identify an emerging channel or one that is prone to distribution. Number 1 is any vertical, any business that are accelerating their path toward being more digital. Think a bit, for example, about neobanks. Per default, neobanks are like Revolut. They are pan-European, they are tech-driven. They need an insurance solution that is API-driven to be integrated to build a different UX experience for the user. So those ones, they will need a tech-driven digital native player to support them like an Insurtech. But traditional banks that have a lot of partnership are also trying to copy the model of those neobanks and are evolving toward a more like digital offering. And then they are actually prone for disruption and very open to partner with Insurtech. Another example is OEM. They are going EV. You know what is an EV car? It's a software with 4 wheels. And this software with 4 wheels give a lot of new opportunities to add and rethink the way you distribute insurance. So that will be number 1. Second one is all the business and the verticals that are switching from being local only to being multi-country or pan-European, and that's especially true for Europe. In the past, a lot of business were local. So when they needed to include insurance, they were dealing with local insurance company. And to cope with that, traditional insurance company have built 32 insurance factories to serve the 32 countries across Europe. But now a lot of business, Revolut again, for example, or Chinese EV entering the European market, are thinking Europe as one country, one distribution, so they need to find a partner that can accommodate a multi-country pan-European solution. Again, great opportunity for Insurtech. And last but not least, and that's very important, it's, a lot of traditional distribution channels are looking at insurance as a side product to upsell, and that's it. But there is a change of mindset with a lot of business are thinking, can I really leverage insurance as not being a side product, but something core to my value proposition? How can I increase retention? How can I show my customer that I care? And I would like to coin something from an article from BCG, that we are shifting away from B2B2C and going to business for business to consumer, where the insurance company is thinking with the business how to enhance the global value proposition. And that's basically the 3 criteria that I use to identify a new distribution opportunity.
That's a lot. No, I think it emphasizes that we have to break the chain of these like handoffs, right? And how do we get towards kind of symbiotic congruency and fluidity? What do any of you all think about how we prioritize effectively?
Yeah, I totally agree with Quentin. Quentin mentioned one very important point is when you move from thinking about creating new revenue streams with insurance, but insurance becomes your core value proposition, and Revolut would be one of the cases. So we totally identify with that mission, with that space, and there's a gap today to fill. The good aspect of it is that everyone is very enthusiastic with it and looking to the opportunity.
Yeah, Dan.
Yeah, I was just going to say, like, as an Insurtech, you have to knock on a lot of doors to get and hear a lot of no's. And so for us, we kind of have existing partners that want new products, and for us, like, that goes top of the list. Like, if you're an existing partner, existing customer, we're going to prioritize the work that you kind of have in front of us. And then it's just a lot of trial and error, I think. And so, we have teams that sort of prioritize each opportunity, and I don't think we have it perfectly down, but I think it's just a function of knocking on enough doors.
Go ahead.
Well, thank you. I agree with all of the comments that are being made about why important partnership is. From the traditional insurance company's perspective, the traditional notion of insurance is that it is being sold as a standalone product. However, as we have a more comfortable, more convenient, more diversified living styles and lifestyles and activities, insurance is not not necessarily being sold as a standalone. So naturally, we may need to think about how we could create a combination of our economic activities and insurance products so that we can propose better ideas for final customers. And everybody talking about embedded insurance as a way to deliver such propositions, and it could be far more appealing, far more compelling, and far more convincing for final consumers. So that is kind of what's going on in the current movement of partnership together with the Insurtech companies.
Yeah, so I think that's interesting. You're all bringing up something which is overarching, which is we as people, right? Like everybody in this audience, we want to just basically live our lives. So I always used to use this word called lifestyle assurance, which gets away from the IN and insurance, and we think about it as which connects to the embedded, which connects to distribution, which connects to carriers thinking it's not just this standalone thing. And how do we really integrate that in an intuitive way? And personally, and now the question's coming back to you, Masashi. I think personally when we went after embedded initially, it was actually still fragmented. It was this like, okay, we're on this one journey and then insert another journey, click a radio button, yes or no, and I won't name any names, but there's many famous examples of this. And as a consumer, you're like, okay, yes, it's like in my face, but you very much feel that it's an upsell, right? Like you feel this fragmented friction of, wait, I was in this one journey and now that, yeah, it's in the same web page or the same app, but like friction. So to me, distribution and embedded would make it feel much more organic, which would make it feel much more intuitive, which would make it feel much more, oh, I wanted that, and then it appeared, right? Like, so how are you thinking about that from a carrier side with partnerships and distributions and your strategies? And then, of course, I'd love to hear what the three of you all think about it. So over to you, carrier, and then we'll come back on the other side.
Okay. Thank you, Lisa. In short, there are many ways of making it as most meaningful ways of collaborations and providing value propositions for final customers. Of course, as a career perspective, we can work together with the Insurtech companies by providing our large capacities for them so that the Insurtech players can create their capital light and balance sheet light and fee-oriented businesses as a way to create the businesses and scale of the businesses without having borne large capital needs and balance sheet needs. So that's one way of doing that. But from a pure legacy insurance company's perspective, we need to appropriately address the diversified lifestyles of customers. It's not just simple upselling, cross-selling type of things. Because by the way, because the reason for me to see that perspective is that I have a fairly diversified background other than insurance. Previously, I used to work for BlackRock, asset management company, but even before that, I used to work for Visa, payment technology company. And interesting notion is that whenever I talk with the president, CEO of credit card companies, 21st centuries, everybody is now looking at the internet. So and channels have been pretty much converted to the internet website and whatsoever. But it's not just the only thing that we can observe by providing the internet channels as a way to do that. Interestingly enough, the most frequent customer acquisition for credit card company is in the midnight. Meaning that young people, after working and after drinking, and finally at the end of the day, spending 15 minutes or 30 minutes in the middle of the night.
So last night after all the kickoff sessions was when the credit card.
And they look at
So when does insurance happen?
So that's right. So number one, existing distribution channels like agents or brokers and those kind of things, while admitting that the insurance finally would have to require certain human factors and human touch, but at the end of the day, we need to appropriately address the changing kind of behaviors and lifestyles of those younger generations or diversified lifestyles of the customers. Working together with Insurtech specialist companies is one of the ways to solve that questions from insurance companies' perspectives. And the other thing is, the other thing is, we tend to be rather too much obsessed from the traditional existing insurance products such as auto, property and whatsoever. But as we see the diversified needs of the customers, as these CEOs have been already undertaking, there are many new emerging themes for our lives, like ride shares, like gig workers, financial services, healthcare. We need to appropriately address those kind of things. But in order for us to do that, we need to create a breakthrough. But however, the historical success creates a kind of success trap. So we need to create the breakthrough by working together Insurtech companies by accelerating the pace of innovation from legacy insurance companies' perspectives. So there are many ways working together. And as a result of that, since about a year and a half ago, we have entered into a strategic alliance with the company called Baltic, which is a Singapore-based unicorn company running businesses across 31 countries in the world. They are mostly doing embedded insurance businesses and doing lots of new emerging themes like these gentlemen does. And but seems like the kind of chemical reactions by working from legacy insurance companies and emerging insurtech companies seems to be somehow addressing appropriately to the way we should be to the changing world overall. So that's my perspective.
Any thoughts on that from how you all interact with carriers a lot? You get that door, you knock on a lot of doors, you probably get that door closed a lot, and even when you get it open, my guess would be the pace isn't quite what an insurtech needs it to be in order for your burn, your revenue, your ARR models, et cetera. How do you all respond to that, and how do you think about that, almost that carrier mindset, right? And really being able to drive, because we've got a lot of things that I heard here. How do we drive that and meet the pace of the balance? Because a carrier, of course, can take a lot longer than an insurtech. Maybe Domingos, you're smiling at me.
Sure. So in the beginning, it was totally different than as it is today. And carriers and insurance companies, they innovate a lot, and they are very receptive to what's happening now. It's a kind of a myth that they are old, they do not innovate. They actually innovate a lot. And they are very receptive to be approached with opportunities. And you were mentioning about the feeling about upselling, cross-selling, which is not great. Of course, we are all aligned in a mission that is embed insurance and make insurance part of our day in the life. Nonetheless, we should not forget that customers still have the need to upgrade, to change the product, to buy an additional product. And we believe that there's still a space, and we believe that we are co-leading those initiatives, that is, to find not also the right partnerships to embed an insurance product, but also how to make sure that we are introducing the right insurance product to the right customer at the right moment when that customer needs to make an upgrade or a cross buy with another insurance product. So there's also space here.
Sure. Anybody else have thoughts? Dan?
Yeah, I think in general, it's all about finding the right carrier partners. We spend a lot of time managing those relationships, and they're super important to us. But I don't think embedded sort of scares carriers. Like, before embedded was a term, affinity is something I think most insurance executives sort of understood. But to me, like, the whole idea of upsell is like the essence of insurance, right? Like typically insurance is a regulated product that's needed at a certain point in time. So you buy a house, your bank requires homeowners insurance. You buy a car, you need auto insurance. You have a baby, typically you need life insurance. And it's all about, creating products together with your carrier partners that don't seem like an upsell, but it's something that is like needed by the customer. And you can gauge that by, measuring your conversion rate. And I think it creates sort of a win for the customer, the carrier, and the insurtech as well if you get it right.
Yeah, actually on the relationship between risk carrier and insurtech, something that I like to remind is that at the beginning, a lot of people were wondering, are we frenemies? Are we enemies? Are we friends? And reality is that it's a chance for insurtech like us to be able to rely on a very strong and robust capital, on insurance companies that are tier one, that are very serious about the governance, about the regulation, that are extremely well funded, that have a lot of regulation in regard to solvency capital. And that is actually something that is helping us, because when, as an insurtech, we go to a partner and we say, look, we have the technology, we have everything, we have the TPA to support and add insurance into your value proposition, this partner, whether it's Revolut or Amazon you were naming, they might be afraid. Those guys, I will rely on them. It's a systemic risk because I will rely on the technology, but what if they fail? And the answer is that, you know what, if we fail, the backup behind might be AIG, Chubb, Swiss Re, Tokio Marine here, and that's actually something that is really helping the Insurtech, and it's a win-win. We can rely and we can use their brand, their reputation, their financial robustness, and at the same time, insurance company that can rely on us for the execution, being more agile, being more tech-driven. So I think it's a very nice ecosystem, actually.
Yeah. So Dan, let's move on to successful collaborations and what it takes to find, execute, and deliver a successful collaboration. Like, what are some use cases that you've seen?
Yeah, I think there's been to me, the gold standard is when you buy an iPhone. So for those of you that use an iPhone, you buy an iPhone or an Apple Watch and Apple Care is there. That product to me is just fantastic. It's something.
And gold standard invented by?
Sorry?
And it was invented by?
Who?
The Apple Care was invented by, not the insurers.
Yeah.
I'm just saying. Right?
Exactly. Yeah. But it's a product that
I had to be cheeky about that.
You
one.
as the consumer want this, and it just works, and it's there at the time you need it. Yeah. So for us, we spend a lot of time, trying to identify those opportunities. I think there's been other examples of very interesting sort of use cases where embedded works. I think Qover Genie has done some great stuff in the travel and sort of warranty space when you buy a trip somewhere or if you buy some sort of product. In the US, Tesla, I think, done an amazing job building out their insurance inside of the vehicle itself. It's live in a few states. I think it's got over $500 million of premium now, which is getting relatively significant. You told me not to humble brag, but we like to think of our Amazon product as quite innovative as well. So we insure the Flex drivers in the UK in a very seamless way. It's a usage-based wallet that just sort of works for the drivers, and we've been able to capture almost 2/3 of the market. So I think there's a lot of kind of use cases. It's all about structuring something that's customer first and making it not be sort of an upsell, but something that's needed at the time of sale.
Yeah, I think the tentacle that threads through this, and if we start with Apple Care, it's and I would actually maybe like to change the word need to want. My kind of 4-letter word is want, and I like it because they're both 4-letter words. But I think consumers in the cases that you're describing want those products, and they appear at a time when that want is high, and it comes back to your point about lifestyle, right? And so I'd love it if you all would just kind of. What do you think about that?
Well, Lisa, I think you're raising a very fundamental and critical point on that particular occasion and setup, because as we see the diversifying lifestyles and for within our customers, there are many types of risks as insurers that needs to be addressed. However, that notion of risks is quite subjective, and what used to be tolerable. From the old lifestyles cannot be tolerated anymore. For example, 20 years ago, if you break your cell phone and having a kind of 3 days, 4 days, or even a week of blackout, you can still tolerate your lives without cell phones. However, in these days, if you have even a 1 day shortage or break of cell phones, I can no longer live anymore. Cell phones, the most precious and important things only after to my life. So, the notion of risks is changing, and it's quite subjective. So we need to continue to somehow, strengthen our messages for the broader group of consumers, so that the consumers can clearly understand the necessity of the risks and so forth. So when it comes to cell phone device protection, for example, ideally, entire group of customers can sign up for Apple Cares and whatsoever, but still that's not necessarily the case. That means customers are quite diversified, and every single person has a the different perspectives on potential damages and how painful those blackout from out of break of cell phones are. And
That's right. I just want to emphasize that when AT&T went down, the $5 they gave me did not take care of my 8 hours of panic-stricken, not even being able to drive my Tesla. I'm like, what happened to AT&T? Okay, sorry. Quentin, your thoughts?
Actually, I like to be a bit controversial here. I think Apple Care is the worst product ever.
The product or the buying process?
Tell me what you really think.
Hashtag Apple Care.
Is there anyone from Apple in the room? I hope not.
I doubt it.
No, I think we have a moral duty and we have a code of conduct that we should have in terms of sharing the right value when we earn a premium. And what I dislike fundamentally, and that I see too much with those similar programs that Apple Care, those are partner distribution channel where they are getting 60, 70, 80, 90% commission. I think this should be banned. I think this should be called a scam. I'm sorry about that, and I'm very, very strong about that. And I see that some Insurtech are actually paying that kind of commission. That should be regulated, that should be banned. And I think, we should be on a mission to maximize the loss ratio while being profitable, because the loss ratio is the amount, is the value we create to the society. Of course, only if you're a P&C insurer, because a life insurer means all the clients die, so we don't want that. But Apple Care, for me, is the wrong example. It's a very high margin product with insane commission that should be regulated and banned.
Yeah. I think what you're bringing up, though, is, and I want to get to this, Domingos, I want to get to, how do you create this compelling case to actually get a carrier to want to partner with you? So let's connect this thread. On one hand, in corner one, which I agree with Dan's corner, it's intuitive and it feels good. I also agree with Masashi, man, you take my phone down, I am an unhappy person. Hashtag AT&T. I also agree with you, though, that there's this counter ring in there, which is okay, to what economic degree? Right, I got a CFO background. I agree with you. But the consumer, at the end of the day, wants to feel that it's organic, right? And so, Domingos, we have to put all these corners together, right? You have to get the whole ring, and you've got to get everyone inside the ring. And instead of boxing against one another, we have to be on the same team of conditioning. Because at the end of the day, we're trying to serve society. How do you partner? How do you approach positioning to somebody like Masashi, other than karaoke?
Of course. I will go back first to Quentin's point. Let's not die the controversial aspect of the conversation. Just one quick note is that I think Dan is totally right, or we share the vision that the product just makes sense. The same way you pick a 64 gigs iPhone, you also pick the Apple Care. But the pricing totally, of course, there's a topic with pricing. Fortunately, here in Europe, at least the space is highly regulated. Everyone is looking to those highly paid commissions where the customer is, at the end of the day, paying for commissions and not for the risk that they are representing. Nonetheless, going to your question. So, at Habit, we actually started the company by licensing technology to insurance companies. And we started the company like that, and it was actually a big pain. Large sales cycles to insurance companies. Our core sponsor usually there's high churn and people were rotating, so we were always ended up losing the momentum. And there was a point where we decided, okay, we have built this, sorry, Quentin, this orchestration platform that is actually working on, there's a customer buying or quoting an insurance product. We are activating the risk on this insurance company. We are informing the reinsurer. We are activating servicing assistance to that customer. So we are contacting multiple entities to say there's a new customer. And there was a point where we said, let's use our own technology and bridge the space instead of being licensing to insurance companies. So that resulted in Habit sourcing partners like telcos. We work heavily with telcos, sourcing telcos and then knocking at the insurance company's door saying, we have this business opportunity, this is how we are going to conduct sales. Would you like to supply risk? Would it make sense to you? And things immediately shift for Habit. We moved from licensing technology to insurance company to sourcing business opportunities, and in our opinion, very well designed for sales. And please go ahead.
So while you're there, there's a question from the audience, and I just want to weave it in right now about pricing. So you're at the perfect point for this question, sorry, which is, okay, so you pull together the telco, you're basically creating a product, you're going to the carrier and you're saying, listen, I think we have a business opportunity. So we lead with opportunity in business, not here's some tech. We're leading with an opportunity, and now we've got to get to pricing. How does the pricing work in that example? Because perfect connection to that question.
Yeah, as the source of the business opportunity and the building up of the insurance product, we are highly involved on pricing and how much are we compensating the end distribution partner. Fortunately for us, we are in a highly regulated space, and we feel that insurance companies and who's taking the risk are highly committed to make sure that the price is fair, at least in our experience. But of course, we know the Apple case. But pricing is a topic where we not only feel strong about it, but also the insurance companies are backing us up, saying there's no such a high commission, and the customer should not be paying that commission.
So I'd love to give the pricing to actually all of you panelists to make sure that we cover that off. Like maybe Quentin, we'll start with you on pricing and who leads and how do you kind of regulate the pricing. Clearly there's the filed regulatory point from the insurer, and then there's what I'll call the markup on top, right? The commissions, the distribution, all the things, which connects to another question on here. So I'm going to ask you the pricing and extend it +1. The +1 is, as we extend and add elements to the value chain, i.e. distribution partner, commissions, et cetera, where does this cost savings come from for the customer? So it's kind of a connected question.
And by the way, despite having been a bit controversial, and I hope I was not recorded, I agree with Domingos that if you work with tier 1 insurance company, they have an internal code of conduct and ethic, and they would really have a special attention to the level of commission. Unfortunately, not everyone is working with tier 1 company, and you have people working with Malta papers and all the kind of stuff where it's a bit more in a gray area. To come on your pricing, I think at the end, what does matter is to report in terms of loss ratio, to maximize the loss ratio, as I mentioned. And I believe that Insurtech have the possibility, thanks to the technology, thanks to investment in AI that is coming, by the way, big time, to reduce significantly the cost of distribution. Because by default, when you embed insurance, you streamline the cost of distribution, so you can potentially, reduce this cost. And secondly, you can decrease significantly the expense ratio, the cost to administrate an insurance program, thanks to massive investment in automation, straight-through processing, and AI, which is, for some people, it's still, you think, a buzzword. I think none of us really realize, ChatGPT-5 is coming. It will be, say, 7 to 8 times more better than ChatGPT-4, which was already 6 times better than ChatGPT-3. So I don't know if people realize this is very strong in terms of how Insurtech can actually decrease the expense ratio, smoothen the integration, and so also smoothen and decrease the commission potentially. So that will be my link to your question.
Thank you. Dan?
Yeah, I mean, for us, like pricing, I think there's two parts to it. Like for the customer point of view, you want to weave in the embedded product itself. You're not just trying to sell a commodity. You want it to be some sort of like usage-based product, and you want to use some of the alternative data that your partners kind of have. And then ultimately, like the embedded distribution should result in lower expenses as well, because there's less kind of middlemen in the picture. But coming back to Quentin's point, I think like fundamentally, insurance has too much regulation, and for me, it's about coming up with a point where supply and demand sort of meet, and you're providing value to customers.
All right, the core economics is our industry. What do you think, Masan?
Well, first of all, Tokio Marine would like to be a nice partner to everybody. So we would like to be as flexible as possible. At the end of the day, it's a kind of matter of commercial negotiations between the Insurtech players and the carriers, and at the end of the day, final consumers. It involves kind of fine tuning of the coverage and definition of the losses, and that's number one. Number two, how comfortable we are in dealing with those particular types of risks to be covered, and number three, how we present those ideas to the broader consumer communities. I believe that the fairer, the broader, and the more embedded the insurance products are, I believe we could be even more fairer in terms of pricing.
Yeah.
Because if we are only dealing with a very limited amount of people, that could involve negative selections or those who could utilize opportunities of insurances for more intended kind of loss claims or whatsoever. Sure. However, if we provide embedded insurances to a broader and kind of neutral sets of group of people, we could end up with providing a fairer priced products for consumers. So that's the way we'd like to be.
The law of large numbers through embedded. I like it. Okay, so we're 2 minutes away from time. I want to ask you all so much ground to cover. I want to ask you all, for all this amazing standing room only audience, by the way, what is your call to action that you would want everyone to take from this? For mine is going to be distribution matters. It matters a lot. The entire value chain starts, stops, and ends with distribution. All of the rest of it is there to support getting to our customers and getting them the products that they want. Okay, so I'm going to start over with you, Quentin. What's your call to action?
So, I think something that has changed because we started in 2016 is today in insurance, partnership is really becoming something. 8 years ago, a lot of risk carriers were reluctant to partner, and now it's partnership. We are creating an ecosystem together. We are working with other one, and so that's a big takeaway. Go for partnerships.
Thank you. Dan?
Yeah, for me, it's designing products that actually solve a problem for customers and being sort of customer obsessed. And I agree that partnerships sort of matter, and I think this is why embedded insurance is so exciting.
I love it.
For sure, partnerships, and if you have a customer, an audience, make sure that you are not injecting but placing the insurance product that your audience will value and make sense for your core product and offers.
All right, let's close it down.
As I said in the discussions, there are many ways, there are many reasons that why we'd like to partner with the insurtech companies. But by doing so, we'd like to create even more comfortable and convenient and enjoyable lives for our society and community. That's it.
Thank you. Right on time. You all are amazing. Thank you, audience. Thank you, panelists. Could not have been better. Thank you.